Hi, I'm Ben Reppond. Welcome to my YouTube broadcast. Today is Wednesday, September 10th, 2025. I'm going to give you the reports for what went on in the market last week. And I'll begin with the dashboard on the indexes. These are the 4 U.S. indexes, 2 foreign indexes, and long-term government bonds. The Dow, S&P, NASDAQ, and Russell 2000 small cap index, and then the emerging markets and the developed markets. So this is a view that you don't see very often. Now, to the right, I have the list is vertical, and to the right, I have the 20-day moving average at 20, 50, 100, and 200-day moving averages. Where is this index relative to its moving average? And if you watch this, you know that sometimes they're above or below and so forth. And so here we are. Maybe I've seen this one time in 3 years, but all 7 are above all 4 of their moving averages. Wow. So in the yellow box, you will see that actually, even though we went from some of them, a few that were negative last week, to all being positive, actually, because it's a moving average, actually, the S&P 500 was slightly negative for the week, but it resulted in, on a moving average basis, still being above all of them, above all of the moving averages. In the yellow box, you see it's mixed. Some were negative last week, some were positive, slightly. And in the red box, this is year-to-date numbers. So the one that's year-to-date, the best index is the developed markets, mostly Europe and Asia. And when I say Asia, I mean primarily Japan. And the emerging markets was second. Matter of fact, they are like double the best index in the U.S. So the foreign markets are doing really well compared to the U.S. So the NASDAQ is the best for the U.S., followed by the S&P, followed by the Russell 2000, and then finally the Dow. And then that is followed by the long-term government bond. So that's the picture. Let's move on to the sectors. The sectors are, again, in the yellow boxes last week, you see it's mixed. Some positive, some negative. The most positive by far was retail, and the most negative by far was energy. And they range from 19% rate of return for telecommunication year to date, all the way down to almost no rate of return for healthcare. And then you can see there are 8 that are below their 20, 50, 100, 200-day moving averages. This is what this looks like. This is the S&P 500 represented by SPY, and for the last 3 years. Most of this period of time, it has been above its 20-period moving average. 20 period meaning the period of, a weekly chart, 20 weeks. We had a dip. You see to the right of the chart, there is a dip, and that was mostly in February and March, and the first week in April. And that was a result, it seemed like that was a result of the announcement of us imposing tariffs on this country and that country, etc. Maybe there would be counter tariffs or whatever on us, but our reaction, or the market's reaction to that, occurred in that short period of time. I put this also on a candlestick chart, and that is what that looks like. So you can see the more negative weeks are in red and the more positive weeks are hollow. Then I take this is a daily chart now. Take the S&P 500 from January 1 to present. So every one of these candles is a day. And, you know, a lot of negative that went on during that first quarter. And then after the first quarter, a lot of positive. So, but basically I put the black arrow to just show that generally this is moving in an upward direction since early April. On a relative strength basis, I compare the NASDAQ 100 to the S&P 500, the NASDAQ being the numerator and S&P being the denominator. So when it moves up, it favors the NASDAQ, moves down, it favors the S&P. And at the very end of this, if you look where my black arrow is pointing, at the very end, there is a tick up. That's last week. This is because this is a 3-year chart, a 3-year weekly chart. So that little tick up represents the degree to which the NASDAQ 100 outperformed the S&P 500. But overall, during mostly a lot of the gains were in the first year. The last 2 years, it's mostly just been up and down, not really moving, more of a sideways movement. When I take the S&P 500 and take out growth stocks and value stocks, growth stocks meaning companies like Google, Amazon, Apple, etc., those companies as the numerator, and then the S&P 500, then the value companies, old economy type stocks, as the denominator, which one is doing better on a relative strength basis. The NASDAQ 100, again, had a tick up at the very end. A lot of up and down, but overall, in that 3-year period, NASDAQ 100 has outperformed the value stocks. The S&P 500 numerator and the small cap index, the Russell 2000 small cap index, as a denominator. So what's happened is you see that drop off at the very end. So that indicates the degree to which the S&P 500 underperformed the Russell 2000, or you could say it the other way, the degree to which the Russell 2000 outperformed the broad market, the S&P 500. So just in the last couple of weeks, a big move up on behalf of small cap. Long-term government bond, the ETF is TLT. On a 5.5-year basis, the black arrow indicates the long-term direction. On a more intermediate term basis, I put a red arrow showing that the government bonds, in this case, the 20-year government bond, for the last, over 2.5 years, it's really gone nowhere. It's gone up and down, but really it's not really adding a lot of value to the market. The dollar continues to decline since the 1st of January. There are some periods where it's up, but in general, it's moving down compared to the fact that it was moving up prior to January 1. I would suspect there's a lot of geopolitical influence in this direction. Gold had a very good week. Matter of fact, it's had a couple of good weeks. And at the very end, you see the degree to which it moves up and has been moving up over that 3-year period. Now it's quite a bit above its 20-period moving average. It has stayed above that for the last couple of years a lot. So gold, as they're talking about, I saw an article, gold being the next AI. I thought that was funny. Silver, same thing. Silver's moving up. You can see that. It is not as smooth as gold, but right now it's up. We'll get into the numbers on this later, but just on a performance basis, you can see it has definitely moved up. I was in this last week, I was in Nashville to the International Money Expo with my son, who lives there, and he's in that business. And, excuse me, he said there are a lot of sellers right now because the price is elevated and people are getting their money out if they look at it, I guess, as an investment. I do not look at it as an investment. I see it as an insurance policy against the decline of the dollar or the destruction of the dollar eventually. Hopefully that won't happen. So I'll come back to that in a minute. Bitcoin has gone up, but now it's kind of struggling. I think it was a little bit of a positive week, but not by much. Volatility index, there were some, you saw earlier, some negative types, sectors or indexes, a negative component, and that caused the volatility index at the very far right has been moving up a little bit. I put the S&P 500 compared to South Korea, S&P numerator, South Korea denominator, and that moved down just a little bit. This is a 5-year chart. So again, since January 1, the U.S. is more out of favor with other world markets than it used to be. Okay, so back to gold and silver. So a gain for gold of 4.4% for the week, ending at a price of 3601, so 3,600-ish, up 4.4 from the previous Friday. Silver over $40 is now $41.25, getting up toward its all-time high, and that's a gain of 3.2% over the previous Friday, and gold-silver ratio is 87-1. So as I said, I look at this as an insurance policy. I prefer silver. I do own silver. I don't sell it. I just buy it from retailers. Now I buy it from my son because I trust my son, and his prices are amazingly good. So it's a great place for me to buy it, and I'm continuing to buy it. So each person has to decide what they want, if that's something they want. But I think when you think of paper money, it's just paper. It doesn't mean anything. It doesn't have any intrinsic value. It only has value if you and I agree that it has value. And it's declined about 95% in value in the last 110 years or so. So gold or silver give an alternative to that. And I know that I am rare. Most financial advisors do not recommend this. And I can tell you from being inside the industry, it's because they don't get a commission on it or can't charge a fee on it. They won't tell you that. They will deny that. But I can tell you they put it down as a bad investment because they can't, they don't sell it. They can't charge a commission or fee. And I don't know. I don't look at it that way. Okay, a monster box of silver has now gone over $20,000. We did this during the past year. I don't remember exactly when, but during the past year, I remember this being 11 or 12,000, and here we are looking at 20,000. and people are still buying it. But they are selling more than they're buying, though, right now. The markup on this is 11 cents per ounce, so it's 41.36 per round. And of course, 500 rounds makes 680, I'm sorry. Yeah, thank you for watching. If you have questions or comments, leave them in the comment section below.